The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Tuesday. Almost said happy Monday, but we were off yesterday for Martin Luther King Day. So happy Tuesday to you all. Shortened week of trading. It seems like ages ago that Alcoa kicked off fourth quarter earnings season, but boy, things are really going to pick up this week and next with a lot of high-profile tech names set to report. First of all, a couple of house cleaning items. First of all, you're listening to Breakout Investing on TFNN. Again, my name is Ken Shreve. The number to use is 877-927-6648. You can catch my show every day on TFNN from 3 to 4 Eastern. The show is available as a podcast on iTunes. And don't forget, you can listen to all TFNN programming on your smartphone. Just type in TFNN.mobi in your smartphone browser. Listen to the stream that way as well. And don't forget about Tiger TV on the homepage of TFNN.com. Channel 1, the show is carried live. It is archived on Channel 13 with Tiger TV. Not only do you get the show audio, but you can look at charts live right along with me. To access Tiger TV on your handheld device, just open your smartphone browser, type in TFNN.com, and then over on the top right-hand side of the page, you'll see a box with some cell phones in it. Just click that box and it will start streaming on your phone. So pretty good deal. All right, let's check on the markets here. We've got a little more than 50 minutes left to go in Tuesday's session. Right now, NASDAQ Composite, surprise, surprise, trading up near its session high. It is up a little more than 3 points, 0.1% to 31.38. 31.38 last for the NASDAQ Composite. The S&P 500, check on the bogey next and see that it too is up near its session high, working on its fifth straight gain. S&P up a little more than 4 points, 0.3% to 1490, and the Dow Jones Industrial Average is working on 3 straight gains here. So buyers clearly in control for now. The Dow up 43.5 points, 0.3% to 13,693. 13,693. That's the last on the Dow Jones Industrial Average. Let me get a quick read on volume here. Not sure. I don't have the volume levels like I normally do for Friday's session, but we are tracking, we did have options expiration on Friday, so we're tracking 4% lower than what we saw Friday and about 35% lower on the New York Stock Exchange. So we can just check and see real quick. NASDAQ volume on Friday was slightly above average at 1.84 billion shares, and on the New York Stock Exchange, it was quite elevated. Again, options did expire, which can skew volume. Volume on the New York Stock Exchange Friday was quite heavy, 1.05 billion. So tracking 35% lower volume-wise on the New York Stock Exchange and just a little bit lighter on the NASDAQ. All right, folks, don't forget coming up, the Super Silver Giveaway. That's going to January 28th at TFNN. It's going to go from January 28th through February 1st. It's your chance to win a beautiful piece of silver from Great Panther Silver. From January 28th through February 1st, we'll give away either a half-ounce or 1-ounce piece of silver every hour from 9 a.m. to 6 p.m. Eastern. So to register for your chance to win, you can do that right on the homepage of TFNN.com. All right, let's see. What do we know? What do we know right now? Well, we know the buyers are in control in the market. That is a good thing. Don't forget, tomorrow, the House of Representatives, the Republican-controlled House of Representatives, are going to try to pass an extension of the U.S. debt limit out to May 19th. So a little more can kicking, but I'll tell you what, that's another layer of uncertainty that's going to be removed from this market. So the focus is going to remain on fourth quarter earnings season. We'll go over a bunch of earnings reports that came out today. Like I said, a very busy week of tech earnings as well. So it's really all about earnings this week and next week. But the less the market, can worry about what's going on Capitol Hill, I think the better it's going to be for this market. Yield on the 10-year note right now at 1.83%. Let's take a look at a chart of that 10-year yield. We'll see that bond yields, have been under pressure for a couple of weeks now. We had a nice rally last week on Thursday, but then down on Friday, down a little more today, not by much. Yield the 10-year note at 1.83%, and the 30-year is also slightly lower, but not by much. It is currently around 3.02%. February gold, a good week for gold. Last week up 1.6%. Today on Tuesday up $6.20, 0.4% gain, settles at $1,693.20 an ounce. It's the highest level since mid-December or so. Interesting, Citigroup earlier today came out with a note. They're not all that keen on gold prices this year, and next Citigroup cut its 2013 forecast by 4.2% to $1,675 an ounce, and they cut it by 0.2% for 2014 to $1,653 an ounce. So again, gold settles today at $1,693.20 an ounce. Let's check in on that GLD, the Spider Gold Trust, and we'll see that today it is still trading just underneath its 50-day moving average here. It's been resistance for 3 sessions. Not out of the question that it's going to be able to reclaim this former support level that looks like it could be resistance for now, but the GLD right now up 77 cents to 163.86. U.S. dollar index down today, but not by much. Last trading around 79.88. And February crude oil. The February contract ends today. Last week, crude oil had a good week, up 2.1%. Today, February crude up 68 cents to 96.24 a barrel. We'll start quoting the March contract tomorrow. Today, the March contract was up 64 cents to 96.68 a barrel. Check in on the USO, United States Oil Fund, that tracks the spot price of West Texas Intermediate light sweet crude oil. Up, what is that? 5 out of 6 days here. The USO up another 22 cents today, 0.6% gain to 34.99. Economic data earlier today, we had existing home sales down 1% in December from November. That's a sequential 1% decline to 4.94 million units. The estimate was for a small increase to 5.1 million, so a little bit below expectations there. Generally, the housing data continue to look pretty good. November existing home sales were revised slightly lower to 4.99 million units from 5.04 million. Let's check in on the ITB, which continues to show relative price strength out here, holding gains tightly. Last breakout for the ITB, you can see, was when it broke out over 21.5. 21.5 was the last swing point for the ITB, and then that breakout occurred right at the start of the year, January 2nd, January 3rd. You had a little breakout for the ITB, and home builders as a group continue to show relative price strength. So slightly disappointing data on the existing home sales front, not enough to bring sellers into the builders at this point. Thursday this week, very, very quiet week of economic data. Thursday, we've got weekly jobless claims. They're expected to be up 20,000 to 355,000. And Friday, more housing data. We'll get new home sales data for December. They're expected to be up 2.7% from November to 387,000 units. Let's take a look at some of the railroads today. Kansas City Southern got the rail earnings off to a fine start today. Look at the day Kansas City Southern is having, up 4.6% to 91.68. Good, strong volume at KSU. Earnings up 19% to 92 cents a share. That was a full 10 cents better than the consensus estimate, so nice beat on the bottom line there. Sales up 7% to $568.4 million. That was about a little more than $3 million above the consensus estimate. KSU, you want to be careful of not chasing it here, because the breakout for KSU was right in this area here. It was a breakout over 84 in early January, and it is now extended in price. So that's the dilemma that we've been talking about, not only on my webinar last week, but just in general. Want to be careful of not chasing stocks that have moved a lot already. The market uptrend has been doing well pretty much since, late November, towards the end of Thanksgiving. Had another great sign of strength by the market in early January. So hopefully you've been putting some money to work in recent days, because if you're just starting to do it now, you run the risk of either buying stocks that have moved a lot already, or perhaps worse yet, buying stocks that are lagging and not participating, and that could end up being dead money. So just be careful not to chase. I suspect when we do get a market pullback, it's going to give you opportunities to get into some of the higher quality names, but until then, just be careful not to chase. I said it was a busy week of tech earnings, but with Kansas City Southern coming out with earnings before the open today, we're going to get a couple of rails reporting after the close today. Let's check in on CSX. Remember, when stocks move, they tend to move in groups. So, but when you look at CSX, a completely different looking chart than Kansas City Southern. CSX, one of the laggards in the group, stuck underneath its 200-day moving average here, and it is not benefiting from the news from KSU today. CSX down 9 cents to 20.82. Pretty significant resistance level here at 21.21, which is its 200-day moving average. You can see that playing out, plain as day in the daily chart. But CSX, after the close, earnings expected to be down 9% from a year ago to 39 cents a share. Sales down 4% to $2.85 billion. We're also going to hear from Norfolk Southern, NSC, after the close. Similar looking chart to CSX. Profit at Norfolk Southern expected to fall 16% from a year ago to $1.19 a share. Sales down 5% to $2.67 billion. And then, I believe Thursday, we're going to hear from Union Pacific, and that is UNP. Check in on Union Pacific. And now, this is, obviously one of the leaders in the group. You got KSU, UNP acting very well, but Union Pacific's last breakout was when it broke out in early January over 128. It's at 133 right now, kind of getting borderline extended, but stock up 0.6% today to 133.30. Earnings Thursday from Union Pacific. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, friends, to Breakout Investing on TFNN. Today is Tuesday. That means the latest weekly update to my Ultimate Growth Stocks newsletter came out earlier today. Tuesday is the day an extensive weekly update goes out, and then in between weekly updates, I send out email buy alerts and sell alerts for the Ultimate Growth Stocks model portfolio. We did add one new long position today, so if you want to check out and see which one that was, as well as what other current holdings look like here, you can check out 30 days absolutely free to Ultimate Growth Stocks right on the homepage of TFNN.com. What you do is just click on the newsletters tab, and then from there click on investment newsletters, and you can test drive Ultimate Growth Stocks absolutely free. All right, mentioned the railroads. Excellent numbers from Kansas City Southern before the open today. After the close, CSX and Norfolk Southern, two laggards in the group, will be out with earnings, and then Union Pacific having a good day today. A little bit extended after a recent breakout over 128, but we're going to hear from Union Pacific on Thursday. The airlines still looking pretty good here, showing relative price strength. Let's check in on Delta Airlines. They reported, you can see the move that Delta has made, but again, breakout in December over $10.50. This one is definitely way extended here. Don't want to be touching the stock. And believe me, folks, it is tempting to buy these stocks showing relative price strength, but you have to, identify where the proper entry point was, and if you're too far past that entry point, you're chasing, and chasing is an easy way to lose money. So Delta Airlines having a good day today, up 3.3% to $14.06. Again, the buy point was, back around $10.50 when it broke out in December. Earnings of 28 cents a share were in line with expectations, down 38% from a year ago. Sales up 2% to $8.6 billion. That was also in line. Delta Airlines up an impressive at least 35% since late November. So airlines have definitely been working well here. Also in earnings, let's take a look at Johnson & Johnson, yet another stock that has been showing relative price strength ahead of the numbers. Breakout recently for Johnson & Johnson over $71.50. It is down 60 cents today, 0.8% lower to $72.63. Earnings here, they beat estimates by 2 cents with profit of $1.19 a share, up 5% from a year ago. Sales are up 8% to $17.56 billion, just a little bit underneath the consensus estimate. Their full-year guidance was a bit disappointing. They're expecting profit of $5.35 to $5.45. The current consensus estimate is at $5.49. So disappointing guidance there. Inside the press release for Johnson & Johnson, the company said it's considering selling its $2.2 billion diagnostics unit. This unit makes devices for screening blood bank donations. The unit also sells a variety of tests, more than 120, in fact, for everything from high cholesterol to fertility hormones. Another high-profile earnings report today. Let's take a look at Freeport-McMoRan. Company said metal volumes were better than expected because of higher production in North and South America. A lot of technical damage done to Freeport-McMoRan, but another stock that could be getting ready to get going here. Up 5.3% today to $35.41. Still in a technical downtrend, but that may be changing. So this is one to keep an eye on here. Earnings at Freeport-McMoRan up 7% from a year ago to 77 cents a share. The estimate was for 70 cents, and sales were mostly in line at $4.5 billion. Also good numbers today from Travelers. I believe Travelers is a Dow component, TRV. After early strength, though, the stock is trading near its session low. Big move for the stock early. It was hit an intraday high of 80, last trading at 77.97, up 2.2% on the day, but as you can see, trading near its session low. They smashed estimates. The consensus estimate was for a profit of 14 cents a share. They made 72 cents, so big beat there. Sales were also better than expected, up 2% from a year ago to $6.48 billion. And finally, in the earnings carousel before the open today, Verizon Communications still trying to get above its 50-day moving average here. Stock is up 27 cents to $42.81. Its 50-day is at $42.96. So we'll see if Verizon can start a new uptrend here. They made 38 cents a share. That was below expectations. Sales were up 6%, a little better than expected, to $30.05 billion. iPhone subsidies drove down wireless profit more than forecast. So that's a look at Verizon Communications. Breakout Investing on TFNN. Folks, Ken Shreve with you. We will be right back.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Let's do a quick check on the markets here as we still got a little less than a half hour left to go in Tuesday's session. Shortened week of trading, but again, probably the busiest week yet of earnings. This week and next week will be busy, busy, busy. Right now, the Dow strengthening into the close here, up 50.5 points, almost a 0.4% gain to 13,700. NASDAQ lagging, up 2.5 points, 0.1% gain to 3137, and the S&P 500 up a little more than 5 points, call it 0.4% to 1491. So this is a market clearly where buyers are still in control. This is good to see. Sellers having a hard time getting things going here. Wanted to just check in on the NASDAQ composite here in Tiger TV. I think I've got a saved chart here. Yes, there's the NASDAQ composite. This is a weekly chart here. You can see the NASDAQ is still flirting with a breakout here. In this type of technical structure, wouldn't be surprised to see the NASDAQ add a little bit of a handle area. Maybe we come down to, I don't know, 3,100, maybe 3,050, something like that. One last little shakeout before a breakout. If that happens in light volume, it's even better. If you do get a little market pullback, the less institutional selling you see, the better. Now, with all these leading growth stocks out there that have been going gangbusters, many that are extended in price, when they pull back, you want to see low volume pullbacks here as well, and you don't want to see violations of key support levels. How about 3D Systems? This one, congratulations to longs here, people that were in this stock back around 47, 48 when it initially broke out in December. But when a stock is extended like this and starts gapping up after already being extended, this is what sort of excessive euphoria looks like around a stock, and it is time to be cautious. I'm in no position to say that 3D Systems is about to, pull back sharply, but it seems to be getting a little euphoric around the stock. So 3D Systems up another 5.7% today to 69.58. It is off its intraday high a little bit of 71.22. See, it's 10-day moving average all the way down at 62.31. Its 20-day moving average at around 58, and its 50-day moving average all the way down around 50. So that's that would be a pretty big pullback here. From $70 down to 50, you'd be looking at a pullback of 25-30% for 3D Systems to get all the way back to that 50 area, which really coincides, you can see, with its last breakout area. So at some point, 3D Systems is probably going to pay a visit to that last breakout area. But one thing we know right now, this is a stock in an uptrend, and I'll tell you what, I know a lot of people that want to short this thing, but this is the most dangerous time to short when a stock is acting as strong as it is. The 3D Systems is definitely acting strong. When you short stocks, you want to short weakness. You don't want to short strength. That is a key investing tenet to follow, and frankly, most investors get it wrong there. You short weakness, not strength. And anybody thinking about shorting, DDD or SSYS, you're shorting strength. You're shorting stocks that are under accumulation here. So you want to short the laggard stocks in the market, not the leading stocks in the market. All right, wanted to take a look. We've got a lot going on earnings-wise. Let's take a look at shares of Google ahead of earnings after the close today. Google is trading strangely. I'll just call it strange. You had a recent breakout attempt, and it was a feeble breakout attempt, I must say, over 738. That happened at the beginning of the year as well. The breakout was actually over 730, I believe. Let me just check another chart here. Google tried to clear a swing point of 738. 738 it was, and you can see the breakout really didn't get anywhere, and now the stock has been under a tremendous amount of selling pressure, sitting just above its 50-day moving average here. The stock is down $2.08 today to 702.43. 50-day moving average is at 697.70. So classic example of a stock that's looking quite vulnerable here ahead of earnings, but that said, it is firming up at support here. Hit an intraday low of 695.50. which was slightly below its 50-day moving average, but it's trying to firm up here. So we'll see what Google has to say after the close. Of course, they're still trying to integrate this Motorola hardware acquisition. Earnings at Google expected to be up 11% to $10.58 a share. Sales up 52% to $12.3 billion. So Google looking a little shaky here. Remember, the last time Google reported earnings in October, you saw what the stock did. It was a very bearish day for Google. It has been able to recover a little bit, but still a lot of questions out there about fundamentals. It's online, the ad market. Still, that's really Google's bread and butter. Results should be pretty good there. Certainly, its Android operating system gaining a lot of traction in mobile. But stock still a lot of questions about what underlying fundamentals are gonna look like here. Also, Western Digital. Credit to Western Digital. Stock has made a monster move after hitting a low of around 34 in early December. Shares of Western Digital all the way up at 47.28, up 5.5% today. Big volume ahead of earnings. They report tomorrow after the close. So we'll see what the disk drive maker has to say. The numbers are supposed to be pretty good. Look for a profit of $1.82 a share. That would be up 21% from a year ago. Nice sales growth as well, up 84%. Due to an easy comparison from the year ago quarter, but look for sales of $3.68 billion. So Western Digital is in a big base here. In fact, I'm just going to pull up a weekly chart here for WDC, and this is kind of a straight up off the bottom move here. And ideally, I like the technical structure here. You can see it took out its prior high over here in the late summer, but really would be nice to see a little bit of a shakeout here. 3 straight weekly price gains headed into this week. You could have a 4th straight weekly price gain, and again, since hitting a low of 33.34, it is up 7 weeks out of the past 8. So just straight up off the bottom. Would be good to see a little bit of a shakeout here, but we'll see what the numbers look like from Western Digital after the close Wednesday. How about SodaStream? This is another kind of a perplexing move here. I mean, there are fundamentals that are driving growth here, but another stock that is very extended in price. Breakout over 43 for SodaStream in December. Very tough one to handle though, because even if you bought at the breakout and volume was pretty strong, there was a really big shakeout in the stock soon after the breakout. So this was like kind of unusual price action for SodaStream, but it managed to find its footing. And this is another extended stock out there. A lot of people like to scoff at SodaStream, but bottom line is that there is a very real growth story here. People are buying these soda-making machines that are used in home, but this is speculative stock, a market cap of $1 billion, fairly high short interest. Definitely a stock here that is not going to say price to perfection, but it's an extended stock, so you just want to be careful of buying up here, because the time to buy was when it broke out over $42 and close to $50 a share. You want to be careful of chasing this one as well. Cyberonics. This is a name that we were following for a little while, but boy, big sellers have been in Cyberonics. You can see it came all the way down, touched its 200-day moving average today. Stock is down 3.1% to 48.12. Innovative technology at Cyberonics. They make implantable medical devices that treat epilepsy, depression, things like that. They're surgically implanted. But the story here is that apparently there's a company in Israel called Brainsway. Doesn't trade on the U.S. exchange, but Brainsway said yesterday during Martin Luther King Day that it expects to reach an agreement this quarter with either a U.S. or Canadian medical device company to market its own non-invasive system to treat depression. So that is bringing sellers out into Cyberonics here. I would be very careful trying to catch this one on sale. Big sellers in Cyberonics. Recently, you're swimming against the tide by trying to go long here. Many other fish to fry out there. TV, Grupo Televisa. This is a based in Mexico. It's a company that is was headed into this week with holding gains very well. You had a breakout here in early December over $24-25 a share, and I just loved how it was holding gains tightly here. Stock is outperforming again today, up 1.1% to 28.25. Some stocks, they show relative price strength. There aren't any sellers. They just continue to trade well. Kind of a risky buy up here as well. This was a fairly short consolidation. Let me go ahead and show you the weekly chart for Grupo Televisa. They operate television stations in Mexico, but you can see the recent breakout here runs up. So many stocks out there, that are at some point going to pull back to their 10-week moving average. This is a classic example. TV right now trading at 28.26. The 26 level would be a logical resting point, an area where strong stocks tend to find support. So stocks out there that are trading above their 10-week moving average are a dime a dozen, because a lot of stocks out there acting well with buyers in control here. But when the market does decide to come in here, some of the best performing stocks are going to find support at their 10-week moving average on the weekly chart, and some aren't. The ones that do find support in convincing fashion, those are the ones that the market's telling you to get into. So we'll keep an eye on that type of price action going forward. But in terms of the Ultimate Growth Stocks newsletter, again, I did a webinar last week for subscribers, people taking a 30-day trial to my letter, and this is a good, when the market's in an uptrend, that's the time when we're putting money to work, and we have been putting money to work, not chasing stocks, buying stocks within focusing on stocks still within buying range, companies with good fundamentals, a good story that's driving growth, and basically stocks that are under accumulation. That is important, but it's about, for me, using a combination of fundamental and technical analysis when evaluating a stock. It takes a lot more than a bullish chart, or it takes a lot more than a stock just under accumulation by big investors. Fund sponsorship, institutional buying is important, but I have to see good balance sheet, good earnings and sales growth. So it's about fundamental and technical analysis with me. And again, talking about focusing on laggard price performers or leading price performers, it is always, for me, it's focusing on the leading price performers. That doesn't mean we're chasing stocks. And I know I talk about that a lot, but it's such a common pitfall of growth investors out there. Just because we like relative price strength doesn't mean that we're ready to chase and just buy indiscriminately. So relative price strength is an important. Leading price performers, not lagging price performers, are important, but we want to leading price performers can pull back constructively, and at this stage of the game, with the market running like it's been, a lot of the new buying opportunities at this point are going to come during the next market pullback. Mentioned some earnings reports coming up after the close. Let's check in on shares of IBM, a Dow component, of course. Boy, has this one really been taken to the woodshed. Big correction in the stock that started back in October. Still having a hard time getting out of its own way here. You see how that 200-day moving average has been resistance for IBM basically since the beginning of the year. It came up, tried to reclaim its 200-day moving average in December, was turned away on January 2nd, and we'll see if it gets turned away again here. But IBM reports after the close, technically not looking that great headed into earnings. They're expected to earn $5.25 a share, up 12% from a year ago. Sales down 1% to $29.1 billion. And stock that I've been following seemingly forever, do not own shares at this point because of the technical damage that's been done, but Intuitive Surgical also coming out with earnings after the close today. Shares up 1.5% to $515.95. Very questionable technicals ahead of earnings. We'll see what the company has to say. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Quick check on the markets as we head into the close Tuesday here. Right now, the Dow up almost 46 points to 13,695. NASDAQ tech stocks lagging a little bit here, up. Tech index up a little more than 3 points to 3138, and the S&P 500 up close to 5 points to 1490. Let's check in on shares of Apple, because we're also going to hear from Apple this week. This may be one of the most anticipated earnings reports, considering how poorly the stock has been trading ahead of earnings. Clearly, there are concerns out there about growth prospects in coming quarters when a stock is in a downtrend like this, just hammered by institutional selling. That is not... it's not your Aunt Betty down the street selling her 50 shares or 100 shares or whatever she has. This is just clearly institutional selling going on in the stock, and institutional selling normally happens when growth fund managers become less enchanted by a company's growth story, and I think that clearly is what is going on here. It's possible we could see decent results from Apple, significant resistance levels for this stock to overcome, including its 50-day moving average at 536, and boy, that 200-day moving average at 590 seems like a long way away, as does its previous all-time high, just over 700. But when Apple reports Wednesday after the close, we should see profit of $13.41 a share, and a decline of 3% from a year ago. Sales up 18% to $54.7 billion. Tomorrow, before the open, we're going to hear from Coach. Coach has had its own luxury retail in general, has had its set of issues here. Coach not looking too bad here, down 2% to 60.58 ahead of the results here. It has been in rally mode, hit a low of 54 back in late December, so it has rallied back up to $60.58 ahead of the results. Earnings from Coach expected to be up 9% to $1.29 a share. Sales up 11% to $1.6 billion. In luxury retail, still have my eye on Michael Kors here. At last check, the stock was outperforming nicely today, kind of getting close to a little resistance level here, just over 55. Kors up 44 cents today to 54.19. We're not going to hear from Kors for a little while in terms of earnings, but very real growth story here. This is affordable luxury. I mentioned a lot that Kors tends to get lumped in with Tiffany and Coach and some of these upscale retailers, but Michael Kors is affordable luxury. So very real growth story going on here, like the base that is setting up here. This one's not that far away from a buying area here. We'll watch how it trades in coming days, but this is a stock I like very much in 2013. So Wednesday before the open, we've got Coach. Also tomorrow before the open, we have McDonald's. Hear more what's happening at McDonald's. They've been doing very well. Their breakfast menu has been doing very, very well. McDonald's has made a nice move here since November, when it was trading around $84 a share. It has rallied up to $92.84, up another 0.6% today, and not looking too badly here. So we'll hear what McDonald's has to say before the open tomorrow. Mentioned tomorrow after the close, Apple. We're also going to hear from Netflix, NFLX, United Rentals under a lot of pressure today, and Western Digital as well tomorrow after the close. So very, very busy in tech earnings. We'll have a pretty good idea of what tech sector sentiment looks like after this week. Coming up next, the Tom O'Brien Show. I'll see you back here tomorrow, folks, for another edition of Breakout Investing. Take care.